Hi everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into Coda Octopus groups, and trust me, this one has some interesting turns. It's a bit like watching a tech company navigate a stormy sea. There's profits, losses, and shifts in direction. It's definitely a bumpy ride, so buckle up, and before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can exchange knowledge. Coda Octopus, a company specializing in underwater imaging and related technologies, just released their quarterly report, and the big story is, while revenue is up, profits are down. We will explore the financials, but let us dive into their potential problems that cause these turns. Let's jump right into the consolidated balance sheets, a financial snapshot of the company's assets and liabilities. So increase from about $3.5 million that shows their sales might be getting better, but they may or may not be getting paid for it. However, a more worrying thing is that their inventory, stays relatively the same. That's because they do not have a massive amount of product moving in the time span, meaning less customers served and less income to be made. However, the more positive thing is that their cash on hand, seen here has increased from $22.04 to $24.4 million, meaning at least they have more money available. Finally, their total assets was up from $57.5 million. That shows the snapshot that despite there may or may not be incoming potential issues, they will survive the next big wave that hits them. In the stockholders equity section, it looks like Coda Octopus issued some stock because they're up a little. Let's move on to more important matters. Now let's talk about the consolidated statements of income and comprehensive income. This is where we see how the company actually performed. Are up significantly for both the 3 and 6 month periods, comparing 2025 to 2024. For example, the last 3 months report there has increased from $5.3 million to $7 million. That's about 24%, but it also seems that their expenses are up. What is cost of revenues? It's simple. That means the amount of assets they use to generate revenue, such as factories, materials, and others. But you have to spend money to make money. Gross profit, aka what is left after paying for the cost, shows what the company has left to operate with. However, while revenue might be up, so does the cost, from $1.5 million to $2.55 million to operate with. However, while revenue might be up, so does the cost, from $1.5 million to operate with. However, while revenue might be up, so does the cost, from $1.5 million it's let to operate with. However, while revenue might be up, so does the cost, from $1.5 million that to $2.5 number. It deletes. Let's see exactly why they believe that will become an issue. These factors make sense. Operating expenses such as are also up. This could imply they're reinvesting or inflation and other expenses are up. It's not clear. All those issues makes their stay at exactly the same. About $1 million plus it all that has been said and done. The SOPA share of the company increased a tiny bit, which has barely moved. This means that even though some bad changes have happened, the company seems to have some tricks up their sleeve to maintain steady profits. One last thing, note it swings wildly, showing how sensitive Coda Octopus is to currency exchange rates. The consolidated statements of changes in stockholders' equity shows the history of the company's stock. There is not much to notice for this report. It's just the usual, which does not affect us. Cash flow information isn't my type of information. I don't think this is very important. Now, let's get into the real nitty-gritty, starting with accounting policies. No one cares. Use of estimates. Everyone needs to consider this for every filling. I know it might be important, but I'm having trouble figuring out in what situation this comes up so that I'm able to make accurate explanations. Revenue recognition. Again, I need to read 2,200 words about accounting terms that I do not know. So just to make it brief, they have rules on when to collect the income and report them. Those are called revenue recognition points, and they follow all revenue recognition points with existing accounting financial authorities from what I see. For their cost of good, it looks like are higher for this year. Maybe that means their commission policy needs to change to be less generous or renegotiate existing policy terms to reduce costs. Fair value of financial instruments is boring. Next. This section of the filling talks about foreign currencies. Very standard, nothing really to talk here. Operating leases are in general not important unless you are specifically in the real estate department or care about some random niche that involves with those expenses. Let's move on. This might or might not be important, but there are so many tables in this, so I will just skip every schedule of them. Acquisition costs do not vary widely. It's almost the same every year, so also nothing interesting to tell. Finally, we arrive to the concentration of customer data. It has three reportable segments, which are the marine technology products business, acoustic sensors and materials business, and marine engineering business. If they were to lose a single customer or more, that would affect revenue. So it's best if sales are scattered more often and not just with 2-3 people. We should note there are with net assets, and these also vary depending on who is the customer region. So that also affects. These changes or pronouncements of law seem to have not affected them and won't be affecting their future, at least for now. Goodwill, that'll be a fun conversation. They tell you about it, but it's hard to talk about it here. Earnings per share. Stock incentive plans is the reward they give out to work, so they stay in the company and are useful. We usually do not discuss those a lot as they don't seem very important. There is so much information on every single topic covered, so if you wanted the details, please read the filings yourself. If I were to make it that comprehensive, no one would listen, as it will be as complicated as the financial documents themselves. Finally, the last and least important things on these reports, any legal problems. It looks like the company has no legal problems, which is always a great sign. Okay, having gone through this report, what are our thoughts? Coda Octopus is still managing to pull some strings. Their finances seem to be maintained for now, but a huge issue to consider looking ahead is their lack of a proper plan for customer revenue outside main regions and customer contracts. In conclusion, what's the verdict? If Coda Octopus can control expenses and diversify revenue, it might regain a stronger footing. Alright, that's our breakdown of Coda Octopus's latest filing, a company that could be going places. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.